Hello traders, Gary Wagner here, just after 10:15 in Honolulu, 4:15 in New York. It is Tuesday, October 25th, 2016, and this is the Daily Report for Gold and Silver. We do have moderate gains in the precious metals markets, a little bit of wind in the sails, so to speak, with gold trading up about $11, $10.90 when we look at COMEX December futures at $12.7460. That is about a 0.9% increase in price. High today, $77.50, and the low, $62.40. When we look at spot gold, the actual price is approximately the same, $12.73, $12.74, and the net changes are the same. To silver. Silver's trading up about 1% also at $17.74, an 18-cent gain on the day. The high 81 and the low 52. And then lastly, COMEX. COMEX is at 17.76. Let's take a look at our first chart. So traders, absolutely stellar move today in the precious metals markets. Gold and silver trading up almost a full percent on the day. COMEX futures in December now at $12.7450, putting it up about $10.80 on the day, and we're looking at a weekly chart, standard bar chart format, because I really want to focus on the highs and lows. As you know, as this market came down dramatic and it came down hard, but the interesting thing was we had a couple of different levels. The first level was a 78% retracement level, and that is a retracement from the move of 1200 up to 1376, and then a subsequent drop almost to a 78% retracement. Now there's a line above that at about 48, which is our 38% retracement. I don't have it in, but you've seen that quite a few times. The next chart will have it. And that was a 38% retracement, and that was a retracement of the big picture move for the year, because it began at these lows down here at about 1050 and then came up to this same yearly high that we've had so far at 1375. And as I said, we had this double harmonics, and I felt fairly comfortable with actually entering a trade and placing along in the market, but there were certain criteria that we were looking for that we hadn't seen, and we're just getting that today, and that's what's really important. And I focus upon these candles right in here, these bars. So used to a candlestick chart in the lows, because now you can see on a weekly chart, low, higher low, higher low, and then now this week we've had the higher low. However, what we were lacking was the higher high. So you can see we've had a higher high. Once these lows were made here, we had a high, then a higher high, and a higher high. So that to me signals some good strength in the market. One. Two, it puts our position in a little bit of profits right now. Of course, we're in at 59. And as I talked about last week, what we're looking to do, although I think we're a little early right now, I want to get a little bit more space, so to speak, between our current price and what I believe will be the new real strong level of support as long as this market continues in rally mode, which is roughly at 1266. So that's the area that I would look to move our stops from, because realize that when we put the trade on, we put our stops, I believe they were below 40 or 41, but that's where we put our stops. And so we're looking to trail them up. And the next part that will trail it up to is going to be 1266. And so traders, the next chart that I do want to look at is a daily chart. This is an Heikin Ashi chart, or Japanese average format. It's created simply by pegging the open as the midpoint of the prior session. That's why it looks kind of like a candlestick chart, but doesn't look like a candlestick chart, because it doesn't have true opens and closes. Now, when we look at the market, we have our defined bottom. Here's that harmonics that we spoke about on this particular gold chart, in which you've got different areas, a 38% as well as a 78% retracement. Over the last couple of trading days, though, we had these pivotal dojis that came in, and luckily it does appear as though that was a rest area rather than a key pivot point and a key reversal. Much too early for that. We're shooting for this market right now, I believe, has the real opportunity to go back to 1300. The only area that we're even in in any kind of contention has got to be this top right here. But when we consider really all of the real bodies and these lows that we hit, of course, this is back in June, July, August, and September, before we really broke hard to the downside, of course, which occurred really, it started at the end of September right here and then carried out through the beginning of October, and then mid-October we finally found that bottom activity we were looking for, and now it does appear as though it's moving up. As I said, my expectations on this trade, because on a technical basis there's really nothing until the area of just shy of 13 to about 13.10. That is the actual exit strategy that we are currently looking at, and the area that I believe we can pull profits on our current trade. And then traders, finally, I do want to revisit our weekly chart, but in standard candlestick format, because I think you'll see that we've got a variation of a pretty common pattern that we tend to see as a key pivot point, and that is, this is a variation, we talked about this 2 weeks ago, of a three-river morning star. After a defined downtrend, it meets that criteria. You have a long red candle, meets that criteria. Then you have a star which is gapped at or below the open of that candle, which would come in right here. Well, we don't meet that criteria, and that's the first reason that it is a variation off of this pattern rather than just saying it's a three-river morning star. And then on the final candle to form this pattern, you would get a long green line completing it. Now, this is really not a long green line. However, considering the dramatic price decline that was experienced during this candle roughly 1 month ago, when we saw really the move from 13.25 down to about 12.50, that's such a large range that it would take an immense move up, an immense candle to give it that large green. So what we're seeing, though, is this particular pattern complete, but it looks like it will take a couple of weeks to complete. In other words, if you would combine the range, the open here, with the close that we might get on Friday, and realize it's only Tuesday, let's say that it does manage to eke up to 1280, 1285 in that area, then those two candles combined would look like this, and it would be more of a closer to the variation or closer to the pattern itself. But nonetheless, I think it's given us some critical information and confirmation that we did achieve a key pivot point in gold, that we did achieve these bottoms, we did enter correctly, and now it's a matter of price point creating the rest for us, which means moving to higher pricing. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.